Hi, everyone. Welcome to Analyze Your Trade, episode number 26 for March 6, 2018. Tonight, we will be discussing your trade ideas. And over the last few days, we've had about 40 people submit up to 5 symbols each. And I've put the list together, which you should see on your screen right now. So we're going to discuss as many of those as we can tonight. My name is David Cosmeter. I'm the creator of Timing Research, and I developed this show with Dean Jenkins of Follow Me Trades, but I have Michael Filighera here to moderate, and so I'm going to go ahead and turn the show over to him.
Thanks, David, and thanks for inviting me in today to moderate the show. Looking forward to it. Today we have quite a nice list of stocks to go over, so let me just introduce who else is with us today, and once I'm done, then we'll start again with the top of that order, and then give an introduction of who you are, where you're from, and what you do. So first up, we have Jason Allen Jankovsky. He's with TheLionOnline.com. And we also have Mike Pisani of AlphaShark.com. And those are the panels for today, besides myself. And again, I'm Michael Filighera. I'm the proprietor, owner of LogicalSignals.com. So, Jason, why don't we begin with you and go ahead and tell us about you?
Well, thanks, Michael. Been a somewhat often off again, on again moderator, presenter for David over the years, and this is my first broadcast with the new format. So you might need to give me just a little bit of help to make sure that I give you the best quality input that I can, since the format is slightly different. So, but for me personally, what I tend to do is focus on foreign exchange and the psychology behind trading. And my my main interest is in making sure that traders at all skill levels learn to use their own personal psychology and focus on their trader participation management more than anything else. I think everyone's point of view and everyone's methodology all has probabilities to it, and no one's right, no one's wrong 100% of the time anyway, and they're all just different ways of, cutting the same pie. The problem is that we as traders tend to allow our own personal issues to interfere with our results, and I think that needs to be, at some point, our main focus is maximizing trader participation. So we can take some time on that if clients are interested in discussing it. But for right now, just happy to be here. Hope I can give some input on the products that we're going to talk about today, and just kind of give me a little bit of help, since it's my first time in the new format. So,
well, I'm sure on the very first one that we're going to discuss, we're going to lean on you for your expertise on that one. It's on the British pound.
Oh, the British pound, absolutely, yeah.
Great. And then we also have Mike Pisani from AlphaShark.
Hey, Michael, thanks for having me again. So I have a screen up. SmartOptionTrading.com is my own site. I'm a moderator at AlphaShark. I also have my own service that I run with Smart Option Trading. And I agree, we all look at things differently. And, just because I view things one way and you view something differently doesn't mean it doesn't work. It's how you approach things. My approach is I use the option flow on a daily basis to tell me what names I should be getting into, where they're going after, how they're rotating, and also gives me the sentiment of the market. Flow is amazing. It'll stop on a dime when the market gets to a point and they're not sure what they want to do. It'll turn bearish, it'll turn bullish. And I'll trade options off of this, but I also trade stock off of it, because you know what? Sometimes it's just easier to use common to go with it. In addition to that, I do some mentoring. I help people out. I teach them how to trade. I teach them how I trade specifically, teach them about technicals. Or sometimes people just need help. Sometimes it's a quick 1 or 2 thing fix when you look at what they're doing and say, you're just playing too tight in a whippy market with too much size. Go smaller, take time, and be looser. And then I also moderate over at AlphaShark for an hour a day, where you can catch me there at the AlphaShark site. So glad to be here. Looking forward to it. Thanks.
You're welcome. And again, I'm Michael Filighera, Logical Signals. I started in this business in 1979. I was a market maker on the Pacific Exchange here in San Francisco, and I have traded options here in San Francisco, but also on the London traded options market, on the European Options Exchange in Amsterdam. And my introduction into electronic trading was via the DTB, which is the German exchange, which I traded electronically from Amsterdam. Came back to the United States, came back to San Francisco, went back to the Pacific, and then left the floor in 2001, basically, when things started to change, and attempted to basically take my floor knowledge and take it home and be more of a screen trader. And I realized that it just wasn't the same. And then I switched over and became more of a day trader. And right now that's what I'm doing. I'm focusing on day trading, and I focus on a whole bunch of markets, but basically just going to the ones that are going to be active on that particular day. Okay, so let's jump right into our list that's been supplied by listeners. And the first up is FXB, which is the Currency Shares British Pound ETF. And I'm going to turn it over to Jason to begin. And Jason, what we do is we're taking a look at what your feelings are on the British pound, and also just on what the market is doing and where it might be going.
Okay. Mike, you couldn't have picked a more complicated market, in my opinion, right now than the British pound. So I'm kind of like a doctor. You say, how do you make a sick person well? Okay, well, how do we talk about the pound today, right? I mean, this is a complicated one. I would like to use a short-term bias if I could.
Yes, please.
Okay. First of all, can I just clear the air, make sure that our listeners know that the fact that we're talking about the British pound ETF is less important than the actual underlying currency. The vehicle that you use to exploit anything in the market, if you're going to use a mutual fund or an exchange traded fund or an outright long or short in a cash position, or block of 100 shares at a time in a stock, the vehicle itself is less significant than the underlying reason why that whole thing exists. So the underlying reason why the ETF in pounds exists is to exploit price change in the British pound against a basket of currencies. The problem is that we could, if you want to talk about a basket of currencies against, what used to be the world's reserve currency that now is playing third fiddle to everybody, the Chinese and the Americans, or North Americans, I should say, and the Europeans, this currency is less definable now than it's probably been in the last 20 years, in my opinion, which makes it all the more valuable to us as traders, because that volatility is going to increase. So I would be of the opinion to buy dips in anything that's British pound related. That would be my opinion. Buy dips in it. What makes it so complicated is the fact that, short term, when the Brits decided that they're going to leave the European Union, that's wonderful. Okay, that opens a lot of doors for them, but it also closes a lot of doors. And the currency, whipsawed from the 145, 150 area, and then 6 months later is trading 120. And that's a good size move in a 6 month period of time, but now it's recovered almost all of that. And it's done it in, 500 to 800 point ranges, which it might be trending if you look at a longer time frame period. But most traders that I work with, or that most traders that I've had the pleasure to be exposed to, like to operate on a shorter time frame. So if you're the kind of guy that would like to try to make his account balance higher on Friday than it is on Monday, British pounds is going to give you some great volatility, but you're going to get whipsawed real hard if you're outright long or outright short, in my view. So I would be more inclined to look at an option strategy that you could use to capture time decay. I would think that maybe the best way to play it is to write calls and maybe write puts on really big sell-offs. maybe try to play both sides of the market on volatility. But in my opinion, it's a really complicated market because it's not trending. It's range bound on these big ranges over, 3, 4, 5 weeks. It'll be back and forth over the same 600 points. I mean, that's a great option market for 30 or 45-day expiration if you're using maybe the small option expiration dates, the ones that have like 2 weeks, 3 weeks to expiration, or even if you can use binaries, which are.
Jason,
I'm sorry.
it's Mike. Let me just jump in real quick. The option market is illiquid in the name. Just giving you a heads up. There's
in the ETF.
Yeah.
Oh,
Yeah.
okay. Thanks for clarifying that. Yeah, since I focus on foreign exchange and the cash markets so much, I tend to use futures options for option related hedges or option related plays. And in that case, if the ETF, that specifically is a little less, not a lot of volumes in there, it's very illiquid. An option strategy wouldn't work as well. It's absolutely correct. Thanks for pointing that out. I would have missed that. But to make a long story longer, you're asking me, how I would be positioned. I would say that the ETF, you can't go long and go short and go long and go short. Something that's an exchange traded fund is easily. I would say that you might want to pick one side or the other. But if you can use a combination of futures or options or cash with options, I would be real excited about playing the volatility, but I'm buying dips if that helps.
Mm-hmm. Thank you. Great. And Mike?
So I hope everybody can see my screen.
Yes.
Jason, I didn't mean to interrupt you. I'm looking.
That's okay. No, I appreciate you saying something.
Yeah, that's a dangerous game when you have very illiquid options on a name like this that gaps all over the place.
Yeah, agreed.
I don't trade the currencies. The only thing I ever trade is occasionally I trade the dollar via UUP and the euro via FCX. Was it FCX or not FCX. Whatever the European ETF is. But from my perspective, I think you nailed it. This has the short-term catalyst of Brexit coming up, and it's back in the news again as we're getting closer and closer to that possibly happening. You have a downtrend as a chartist on the stock. And for me, until it can take out that downtrend, the pound is still in a downward move at this point. This is what this chart is implying to me, until it can take it out. And it has support really at that 133, just a little below there, where it gapped up into. So maybe that 133 area provides support. If it got down to there, I'd probably try to buy it if it held there. Other than that, I don't know enough about currencies to help you guys out. So I'll turn my time over to you, Michael.
Thank you. Well, I'm going to stand in agreement with what's already been said, but I will add that it looks like over the short term that the FXB will pull back a little bit, and I'm going to say that it needs to hold above 134 in order to maintain any type of an upside cycle. But again, being that this is based on a currency, and there's so many different factors that go into how a currency is going to get priced on any given day, and particularly one is as traded as the British pound and all the cross rates and everything else. But having said that, I'm looking for the market to pull back somewhere between 134 and 134.26. And if those levels hold, then I believe that the market stands a good chance of getting up to just below 136 before turning over yet again into another cycle, which could be picking up the long-term cycle, which, again, I agree with what Mike said, that it's down. The longer-term cycle remains down. And so anything that's happening here, I'm feeling is happening in terms of just corrective bounces, and then we're getting stronger declines. So short-term, as long as it holds 134.50 down to 134.26, I think you have a very high chance it'll get up, not over 136, but very close to it. Also, I just want to mention that because it is based on the British pound and it's traded during here in the US, you're going to have a lot of gaps. And I don't particularly know, unless you're going in the direction of that gap, how to protect yourself from not getting hurt from these gap openings or gap down openings. But that's something.
Can I just segue with that, Mike?
Yes.
Can I just segue with that? Okay,
Sure.
real quick, on a weekly time frame, which is usually larger than most of our listeners, I think, are going to trade, you have a very important development in the pound versus the dollar that's going to skew this trade. The pound may decline against everybody else, but it may rise against the dollar. So just, as food for thought, your 50-week moving average is rising across the 100-week 2 weeks ago, and the market is due for a correction. So I think that down move, I think we're all probably would be agreed that a down move in the pound is likely just as a technical correction, but from a standpoint of a weekly time frame against the dollar, which I think that ETF you want to check the weighting on that. I don't really know what the weighting is,
Right.
how many pounds versus dollars, pounds versus yen, pounds versus Aussie, et cetera, where the weighting is. But if there is a weighting to the dollar that's higher, you could see higher volatility to the downside. And the dollar, I think the dollar is going to lose against the pound anyway, at least maybe through the end of the year, because as long as you stay above that 50 bar rising average across the 100 bar on a weekly time frame, that's usually representative of professional participation.
Right.
So it
Okay.
may
Well,
be
thank you
they're
very
buying
much.
pounds for dollars, but no pounds are sold everywhere else. That's going to affect that ETF. So that's where I think the volatility could really be huge over the near
Okay.
term there. So I think you're right. You got to watch those gaps.
Thank you very much, and thank you for that additional information as well. But we're going to move on, and our next up is the spiders, SPY, and again, Jason, you're up first.
Okay. Well, if you wanted me, if you could say, can you please pick my least favorite market, that would have been it.
The spiders.
Yeah. Well, not the spider so much, but the S&P.
Oh,
So
okay.
I don't even know if I should. I don't know if I would be qualified to make an assessment here. I really.
Well, that's fair. You don't have to.
Well, I know I don't have to, but can I just say what's on my mind and let that kind of see if it resonates?
Sure.
You look at every time frame on the higher time frame, 60-minute all the way up to daily or weekly, and there's volatility on the lower time frames, trend on the higher time frames, higher, like daily, weekly, monthly.
Mm-hmm.
And to me, that just looks like a train wreck waiting to happen. But
Mm-hmm.
if you if you would have put a gun to my head and said last year, what do you think of the S&P up here at these huge numbers, lifetime highs? It's never been any higher. I'd be like, you got to be looking for a place to sell. You've gotten your ass kicked. So I can't. It's my least favorite market because, from my point of view, it appears to me to be harder to define. But the volatility is up at higher numbers. There's going to be times when you can make some big coin on either side. So I would just be very cautious because I think markets at all-time highs represent selling opportunities more than buying opportunities. But there's a lot of conditions now that may mean we're going to see even higher highs. And I can't really speak to that because if the Fed starts raising rates, that typically is the death knell for stocks, at least short term. But it doesn't seem to be affecting anything. I mean, it's
no, you're right. You're right on that. And I think Mike has been waiting. He's kind of chomping at the bit because I think this is something that he does actually trade.
Yeah, well, I'll definitely defer. Go ahead.
Okay, and Mike, you're on.
Thanks, guys. So first off, let me start. This sell-off should not have come as a surprise to anybody. On this day here, the people who subscribed to me, I said, careful. We had a character change. We dropped below the 8-day for the first time since back in November 15th, and we didn't retake it for 3 sessions. This market was so nice to us during January. It gave us 3 days to get out of Dodge before it finally decided to roll over and die. You don't get that very often. So that said, now we have a volatile range. We've had big widespread candles, and you're getting a lot of movement because of that, right? Volatility means movement. And today was the narrowest candle we've had on the SPY since this sell-off started. So you have a little bit of a change. I've drawn these lines. You have a possible wedge forming here on the SPY, right? And we want to look for a break in either direction. A break above this wedge would probably mean we're going to rip back to all-time highs. I don't mean just a break above it briefly. You got to get a close on it on volume. You want to see it take it back with authority. A break below, we probably lose it. And you have a very area where it's been support and resistance, this 270 area. They've been coming back and forth to it on here. And you can see a lot of handle touches there that comes to it and it stops there on a dime a lot. And that was the first clue yesterday that we were going to be good. We hit it, we touched against it, and then blew through it with volume and never looked back yesterday. Here, the 50 days now, your resistance. We stopped on it multiple times today. And you got to turn the noise off. When you talk to people out there, there's a lot of people saying, "Oh, we have to go retest the 200-day." And there's different vehicles. The ES did tag the 200-day twice. And people don't look at that. They just look at the SPY. You got to look at the SPY, the SPX, and the ES. Yeah, they're all slightly different instruments, but they all come together at the end of the day. We did get a double test of that 200-day. I'm not saying we can't go down or lower. I'm not trying to tell anybody that. What we do have to recognize here is, most importantly, the market changed. We have volatility now. The VIX is staying elevated around that 17, 18, 20 level. It's not going down. And you can't, at this point, if you're a long-term investor, you don't care. If you're a day trader, you love it. If you're a swing trader, you got to be real careful, because this market's no longer bailing you out. You get caught overnight in the wrong position and you're in deep trouble, especially on options the next day. So you have to recognize that conditions have changed, and I've gone into day trading mode and just scalping away and having a good time until the market gives me a commitment one way or the other. And we could chop around here for months. So, recognize this change, create your levels, and go from there.
Thank you. I'm hoping that it's not going to be months.
Could be both.
But the reality is that has to be included in the conversation. For those that have kind of tuned into this show previously when I've been on, know that I am a very, very big proponent of the Elliott wave theory in its truest pure form. And the way that I'm viewing the spiders is the same way that I'm viewing the balance of the components, which would be, the ES and the SPX indexes. And I feel that we've had the initial drop. Now, whether this is going to be a precursor to a much longer corrective process, I don't know just yet. But what I can say within the context of the move off of the all-time highs is that was the first leg. What we've had in between is an interim rally, which came perfectly within Fibonacci sequences and then began to drop again. So the next drop on an Elliott wave basis would come in 5 waves. So we've done wave 1 down, and what we're experiencing now over the last 3 days is wave 2 up. Now, what that does suggest is that this thing rolls over and we fall into a 3rd wave, which is most commonly the largest and the strongest part of a 5-wave sequence. And in this case, it would be wave 3 down. And I also agree that if the market continues to work its way higher and it starts breaking levels, it's going to leave a lot of things in place as it is and a lot of unanswered questions, and then would open up the door for a move back, at least to test the highs, if not exceed them. And again, I'm going to just piggyback on what Mike said, and that is that if indeed it goes up and it starts breaking the wedge that Mike drew, it has to do it on volume, and it can't just go up and kiss and go. In other words, go up, break it, and then slip right back below it. That doesn't count. It has to go up, stay above, and have volume. Until then, I'm going to continue to be more to the downside, and I would be looking ultimately that it's going to break below the low that it created in February, and that was at 250, 281. So it's going to go below that from where it's at. And moving along, next up we have Walmart. So Jason, back to you.
Thank you. I have to tell you that Walmart is not on my watch list. Other than, it's still the world's biggest retailer. I would be thinking longer term that if the numbers come in for Amazon in the next 6 months, year, or so, that Walmart's going to suffer. So I can't really offer a qualified point of view. It's not on my watch list, so I would defer to other points of view other than if you're number one in a field, there's somebody looking to displace you, and that's going to be Amazon. So I think if you see people leaving, professional long-term investors start leaving Walmart, where do you think they're going to go? So I would just say that Walmart, it's not on my watch list. I'm not following it right now, but I would be real. I would think there'd be a watershed moment in that stock if professional activity was shown to be leaving Walmart and going to another retailer, which would probably be Amazon. There's something going to happen with Amazon when it does, and Amazon will be that'll probably be the signal that Amazon has got what it takes to become the biggest retailer, period.
Great.
So,
all right. And Mike.
So I have a slightly different view. One, I'm not a fan of the stock. I've traded a bunch of times. I've never lost money on it, but I've never made out well on it. This thing just seems to grind away forever before it gives you the move, and usually wears me out on options. It usually gets me to bail out with a small profit before I get the big move. So what we have now is we have a big gap down on earnings, right? And the one thing I want to point out, Jason, that I think you're missing here is their online retail earnings were very good. It was their brick and mortar that were not good. And that was that Jet acquisition. And they're the only ones, I think, out there that are positioned to try to challenge Amazon for some piece of that pie.
That's a good point. Yeah, that's a good point. Yeah.
And I'm not saying they're going to win, but they're one of the only ones that are really have that shot. That said, this chart, ugly. You watch a gap down. I try to give it 3 days to bounce it. They tried to bounce it in here. It couldn't even get to the 8-day and rolled over. And now we're coming close to that 200. So for me, this 200-day and that 80 level are important. If the institutions don't defend it there, then you have to start looking down towards this, the 85 level. Then you have to start looking all the way down towards this 80 level, all the way down here. I suspect they'll defend it the first time now, but another bad earnings report and this thing will be gone. Your turn. Go ahead.
I agree. I definitely agree with you on that. I do not trade Walmart. Of course, I'm aware of who they are and what they do. So in that respect, I do agree with the fact that there's probably a lot of questions out there and people that are leery because Amazon appears to right now attracting a lot of institutional money, a lot of retail money, and moving to new highs every day. And I'm not sure if there's just this major shift out of one and into the other. And what does that actually spell out for Walmart? I think if we just kind of leave the fundamentals to be the fundamentals and we just look at the technical side of the stock, I think that the stock will rally a little bit from here. And again, that's as long as, and I'll give you that bottom number, which was 3 days ago, 87 holds. A break below 87, which would say that the bounce is over, which is small as it was, and that we're now heading down to, as Mike laid out, that we're going to give a test to that 85 level. That's going to be a pretty critical area. So I stand in total agreement with Mike in that 85 will remain very critical. A break below there, and we're talking about a significant break, not a couple of cents or a nickel or even a dime, but a significant break below 85, again, with some volume, is suggesting that there's a larger bailout happening and people are just moving out of the stock. And I don't believe that Walmart will be able to stand up against the larger or broader markets selling off. So what that catalyst will be to actually drive the market lower, I don't know. If the broader markets hold up, then I would suspect that Walmart may rally back above 90, and I don't think it's going to get up much past 91.5 if it goes that far, and then roll over once more, and then just kind of go down and test that 85 number. Crucial. If it breaks the 85, then we're really looking, the way I see it, below 75.
Can I just offer one segue here too, guys?
Sure.
On Walmart, I know I already offered the condition that I don't trade it, but it's not on my watch list. But one thing I do know about Walmart is a price-driven retailer, whereas Amazon is a convenience-driven retailer. So I think what Michael said or Mike said about the issue of them acquiring Jet not really making a difference to their bottom line. I think that's because Walmart was being reactionary to the issue and not really addressing the real problem that Amazon presents to them, which is people who want to save $1 on something will make the drive in the car or will go to the store. People
Right.
who just want it tomorrow because they're willing to pay for overnight shipping are going to call Amazon because they can do it anytime they want from their phone. They can do it in between lunch and the
you get
bus
free
ride.
shipping overnight from Amazon now.
Yeah, exactly. So I mean, why a convenience-driven person is going to be a different buyer in the same market. So I think the revenue stream that built Walmart all the way to the challenge that might be offered by the online people, I don't think that's going to go away. I think there's still going to be people that prefer to shop at brick and mortar stores and will want that extra savings, and they don't have necessarily an issue with the time to go get it. But I think it could be that the market is evolving into two kinds of distribution. One is people willing to go to the store and pick it up, and people who are just not willing to do that and want to have it delivered. So where will that end up? I just thought I'd throw that out there because I don't think Walmart will have the same ability to compete with Amazon. They'll have to find some other reason to compete with them on a different level.
Okay. Thank you. Thank you very much for that. We're going to try to pick up the pace a little bit because we've only really gotten through 3, and we have quite a few. We'll try to get through what we can. Before we kind of take a break and do a round on between the 3 of us, let's take a look at Home Depot. And again, we're going to give what we think about what's going on with Home Depot right now and what we may see or not see. So again, Jason, you're up first.
Okay. In my opinion, I think you need to be an outright buyer of Home Depot on brakes. And the reason I feel that way, correct me if I'm wrong, you guys are welcome to show your input, but tremendous amount of interest in improving the value of real estate to resell it in the ahead of what is expected to be the next boom. Most likely, whether there's a boom or not isn't the issue. We don't know if there's going to be a real estate boom, but I think protecting the investment of the people that have already purchased and the investment made by real estate speculators to either create new housing or rehab old housing, I think continues to leave 2 or 3 or 4 good years for people who are directly related to improving real estate infrastructure. So I'm just an outright buyer of it.
Okay.
That's
And
a buy,
Mike.
but it's a buy and hold thing. It's not. I wouldn't be trading it back and forth there. I'm just on dips. I'd buy it and own it, and that's it.
Okay. Thank you. And Mike.
So a little different view. I can't disagree with you, except I think a lot of that big run this thing had was due to the hurricanes, right? It got that huge pop because of the hurricanes and all the rebuild that went on there. Their earnings were not great. Even though they're well off their highs by earnings, it wasn't nearly enough to move the needle. In fact, it came in. And now you're range bound. You have this, 191 area and this 176 area that is trying to trade around, but it's really struggling to recapture the 8-day, right? It can, pop to the 21-day a couple of times and pulled right back under it. I don't have a strong feel for this one. There's been no real call buying into it. And this is a name when they want it, they'll buy calls on it. And you'll see, you're not talking a little bit. We'll see those big guys laying out millions of dollars in calls into this name when they really want it. They don't want it here. So I think you have to watch that. If Jason says, that 200-day down around 167, which is some support. We break below 178. That's your buying opportunity there. By the way, quick rule of thumb on the 200-day for me: if a stock falls below it and stays below it for 5 sessions, I'm bearish. Usually, within 5 sessions, institutions either come back and bring it back above, or they'll continue to sell on it.
Can I just throw one thing out to you on
Sure.
that? I would encourage listeners to check into the amount of money the company has put into its own personal infrastructure and store openings, because I think they're anticipating a whole lot more to happen later. So a sell-off near term might be a knee-jerk reaction with the professional investment community because it didn't hold a certain particular technical price level. I think that might be seen as a buying opportunity for long-minded traders. Just throwing that out there.
Thank you. Were you finished, Mike?
I mean, to me, this is not a go-to name on my list right now from a day trade score, and unless I see something change, I'm kind of on the it's off my radar.
Okay. Home Depot, being that I go there now and then, I think the stock. I'm going to agree with Mike that the stock, really kind of rallied up because of the hurricanes, because of just necessity. Now, having dropped back down to just above 175, it has now held that level 3 times. I think that what also could be lining up, and this is just trader talk, I think there's probably a lot of stops sitting just below 175. That's kind of the line in the sand, and if it drops below, people are going to be out. So I can only imagine that there's likely a larger player out there somewhere that wants to go down and trigger those, and what they have in mind is being on the buyer. They're going to buy what they can on that break below. Now, I've also looked at a little bit of different analysis in terms of where certain algorithms, when they're run, where the stock could be price-wise. And I'm going all the way out till April expiration. And right now, the percentages that there's a just over 40% probability that Home Depot will sit between 163.50 and 181.60. So that pretty much goes very cleanly with what we're being told here by Jason and by Mike, and also by myself, that there might still be a little bit of an initial downside, which I would suspect that Home Depot, like the rest of the market, if the markets drop, so will these stocks. But I think that now we can put an additional line in the sand, the first one being 175, the second one being 165. Would it be unhealthy for Home Depot to drop to 165? I doubt it. But I think that could be a natural landing spot for the stock if things continue to just head south or go sour. In the meantime, I also agree with what is being said. Depending on what time frame you're using for your trading, if you're a long-term trader, you might want to pick up stock here, but just protect your position by maybe buying some puts and just kind of like trying to just hedge yourself against a stronger sell-off. And then if you're a premium seller, there's way too many things to do in the options. The options are very well traded, and volatility is usually good in Home Depot, and so you should be able to put on a lot of positions that will reflect direction, or just that it stays in what we would call a box. Next up, we do have Frontline, and symbol is FRO. And why don't we just kind of see what we got going on here? It's a stock. Me personally, I do not know enough about Frontline to comment on it. And technically, it's a $4 stock. And so it had a very nice day today. It was up 10%. And just today. So, Mike, I see that you have your chart up. Would you like to go ahead and start?
Sure. Like you, I don't trade this name, but you know what? I'll trade just about anything if I think I can make some money off of it, and I see the right conditions. it's a low volume stock. It's a cheap stock. If it had options, I don't even know. I wouldn't trade it. I would just buy the stock. So I suspect it had earnings today. Looking at the volume, you had a big volume on it. And what a coincidence! It gapped right up to the 50-day, and it stopped on a dime on the 50-day. These things don't happen by accident. So now you have an easy way to trade this. If you're long it, you trade it versus the bottom of this gap. It loses there. You're going to get some further downside. It means that whoever the momentum was, it's not enough to propel it further. If it gets above the 50-day and it takes out this sharp descending trend line it's been in, I would look for your next move to be up towards this 470 area. And then if it really wants to get going, maybe tries to get up towards this 490, maybe even 5. But that'd be a big move, and it would have to have some big news to go. And that's the only way I could look at this.
Thank you. Jason.
Honestly, not on my radar. Don't trade it. Don't know much about it, other than I wanted to mention one thing about Mike's chart. Can you put that back up again, Mike? Because I wanted to mention one thing about stocks that are delisted. If you look at, I think this goes back to last year. This chart goes back to last year. The average daily volume appears to be between 1 and 1.5 million shares. I mean, that's like a penny stock, you know.
It's actually less. Here's a million would be higher. It's actually probably closer to about 500,000.
Is it? You think so? Okay. Well, yeah, you might be right, because I'm looking at this a little differently. Maybe I'm sorry. Okay, yeah, you're right. Okay, so that's like a penny stock, and it's at $4. If you look at all those spikes in volume, those are followed by new lows in the price of the stock. It seems to me that the shorts are using high volume days to cover, and then they're done. And so the longs are left holding the bag. So I would say this is a stock that could drop below $1, and if it stays there long enough, it'll be delisted. But I'm just throwing that out there. I don't trade it. I don't know anything about it other than the fact that I'm looking at this going, I would hate to be the guy that runs that company. That's all I'm saying.
Right.
You know.
Yeah, I hear you. I also don't trade it, and so I'm basically going to stick with what Mike has presented. I think that was pretty solid, and basically it's just taking a technical look at the stock and the possibilities of what could happen and what levels to kind of look for. And I hope that that helps cover what this particular viewer was looking for. But what I'd like to do right now, just do it real quick, is just to do a roundtable and to basically give each one of us a chance to kind of go through and to maybe offer a trade or something that that you have an interest in. And Jason, why don't we begin with you?
Okay. Thank you, Michael. That's very, very generous. When we talk about opportunity base, in my opinion, because I'm focused on the foreign currencies, and I consider that my main level of interest. The fact that Bitcoin is now trading on one of the top exchanges that's ever been, period, legitimizes the whole concept of the cryptocurrencies. The blockchain is going to revolutionize the way we do business in our lifetime. Now, does that mean that the blockchain concept applied to currencies is going to be the final incarnation of how that technology affects us or benefits us? That remains to be seen. But I'm a real strong believer that we're in a new era of finance, and maybe we haven't seen what we need to see out of it yet. Maybe there's a long way to go as to what's going to benefit and what's not going to benefit. I mean, if you and I were sitting here in 1980 when the PC was developed and there was hundreds of operating systems you could choose from, who would have guessed that Microsoft, PC DOS would have been the one that made all the difference? Well, we didn't know that. Well, what computers did for business, maybe, it opened the door to the internet. And what internet did for business, retailing, communication, personal freedom, use of time, was a 100 times multiplication of that. What the blockchain technology and cryptocurrencies might be preparing for is a radical departure from what's normal or what's typical or average in the world of finance. It may radically disrupt how we view interest rates, how we view debt, how we view cash as a usable method of getting what we want every day. So I personally think that in the next few months and years, if you really want to be on the cutting edge of finance and the cutting edge of trading and the cutting edge of where all this may be heading near term, you need to look seriously at the cryptocurrencies and find a way to participate. Now, that doesn't mean you should just go right out and buy Bitcoin. Doesn't mean you should just put money in Ethereum. What I'm saying is that you need to be cognizant of what's really happening here. What's really happening, in my opinion, is a new kind of computer programming and a new kind of participation, which is allows more freedom and more control by the individual, but it threatens other established kinds of financial institutions like banks, bond funds, government bond issuance. So there's a lot of opportunity that could develop, a lot of conflict that may develop, but I think in the long run, we can't ignore technology and the fact that we're moving towards a new level, a new quantum leap in finance. And I think that the cryptocurrencies may be the place that happens. Now, the blockchain may develop differently, and it may end up being something that's more of a security measure, or may have something to do with, well, who knows? I couldn't even begin to think about it. But I think that we need to be prepared for that. So I would say that to make a long story longer, if you're looking for the next state-of-the-art opportunity, in addition to the regular, life-changing daily opportunities we have, you need to look at the cryptocurrencies and you need to really understand the implications of the blockchain.
Great, thank you very much. We don't discuss too often the cryptocurrencies, and I believe that I do agree with what you said. But moving along, Mike.
So I was going to talk to you guys about Twitter, which has been one of my favorite stocks, and I've made a ton of money on it since November. But I like the idea of blockchain, so let me bring you up the name. If you really want to get involved in blockchain, you should be looking at Square. And you get any dip on this, and I'm not sure you're going to get much of one. Today might have been it. You should go buy this one. They're a payment company. They compete against Apple and Visa, and they're incorporating blockchain and the cryptocurrencies into their daily activities, which puts them ahead of all the other payers out there, right? You saw news yesterday, PayPal was looking to get Bitcoin on. They're ahead of it. Jack Dorsey got them out forefront of this. There also makes them a buyout candidate, right? If they get this done first, big guys going to come in and say, let me buy them and take them on. It's right back to its all-time high here, right? Broke into blue skies yesterday, consolidated today after a massive candle here. This thing gets through this 50 area, and this could put another one of these long type runs we've seen in this name as it starts to go. And you know what, Jason, to give you some other names, OSTK, another good blockchain company. Spec from in China would be XNet. And then of course you got PayPal and IBM. IBM's developing blockchain technology. They could be the big winner in all this if they can pull it off. So since you wanted to go there and nobody ever wants to talk about them, I love it. So I'll jump on board with that. But Square right now is my favorite company for that. Day or two consolidation, I think we get another move.
Thank you. And thank you both. Because again, I think that the cryptocurrencies and just the blockchain technology is kind of moving itself in and has potential far beyond what I think many traders or just even people in the public sector just don't understand yet. But I like the analogy that you used, Jason. In fact, it's like, if you're really going to look at this, we need to go back to the last revolutionary thing, and a lot of that was the PC. Now, I'm old enough that I was standing on the Pacific Exchange when all of that happened, and I have to tell you, now we look like a bunch of fools because everybody thought, oh, Microsoft, you sell it. all of these computer stocks, they're not going to catch on. You sell it, you sell it. Of course, that was absolutely wrong. And now it's the same thing that I am hearing again as, the exchanges list Bitcoin, and we have all of this discussion on blockchain technology. And I just think that it's being very short-sighted. So I want to thank you both. And I like your trade suggestion, Mike, on Square. I find it very interesting that your other favorite stock is Twitter, which is also Jack Dorsey's other company.
It is. Jack's been very good to me.
And both are based right here in San Francisco. So I get to I spy Jack Dorsey walking around now and then. But I agree with what you said. I think sitting up here on the all-time highs, let it consolidate, but you want to take a look at it. Do they trade options, Mike?
They do, and I made a lot of money yesterday on Square. I caught that move. I had options and common stock. I exited everything yesterday late afternoon, and I'm letting consolidate. Their options are actually fairly liquid, and into the dip today, they were buying all day long. So they're definitely still interested in this name.
Okay.
Hey, Michael.
Yes.
Michael, can I just mention one thing real quick, and then I'll let you get on to the next thing. One of the things I mentioned before is that I'm really strong on the psychology of trading and how you need to be in control of how you think and how you behave. That's really important.
Yes,
I
agree. One of
the clues to really recognizing real quantum shifts in opportunity is to understand how everything repeats. Everything is the same. Nothing ever changes. Everything is always the same. There's nothing new. If your listeners were to go back and look at all of the arguments made in 1980, go through the papers or all of the magazines or all of the news reports, look at all the arguments made why Microsoft would fail, why IBM was out of their mind for opening the architecture on PC when they had closed architecture on everything. Look at all of the issues that had to do with this quantum leap forward in computing power, quantum leap forward in tool use, and look at the same arguments being made today for things like cryptocurrencies, internet, processing of information on a quantum level, all the technologies that are starting to become more and more available, and money is starting to go to those places. Look at the same arguments. It's the same arguments as to why it won't work and the same arguments why it will work. So your listeners could really get a leg up as to why it'd be okay to hold something like Square if it doubled in value next year, or okay to hold Twitter if it doubled in value next year. Most people think about, that's it. That's all I can get, so I'm out. It's okay, because there could be a really big move happening that is predicated by the use of the blockchain that people don't see yet because it's behind the scenes. It's not in everyday life. And that's where the real argument comes from.
Thank you. Thank you very much for that. We only have about 6 minutes left, 5-6 minutes. So I personally want to talk about TLT, which was on our list. So I'm just going to kind of be a little bit picky, and I'm going to go to TLT, and I'll go ahead and start this one. I am and have been very bearish on bonds for a very long time. I would say for the last 4 years, at least the last 4 years. And so many traders, they have core positions, and I have a core position and I'm short bonds and I'm long gold. And I think that that's something to really hold on to. What I find interesting about the TLT is that first of all, let me say, I don't believe there's any safety left in bonds. And so when you see that the equity markets is getting upset and maybe dropping, and so everybody floods and they rush in and try to put their money in bonds, I think that's a very unsafe thing to do right now in the face of the fact that the bond market is beginning to decline. A little bit longer term, well, here's my call. My call is that any rally you get in TLT or in the bond market, you sell it. You continue to sell it. I think over the long term, and I'm going out on a weekly basis, and you can even go further, TLT is headed back towards what we call par, but it's 100. And I think it dips below 100 before all is said and done. So I'll turn that over to Jason, TLT.
Well, when you talk about bonds and interest rates, my personal point of view is that the environment is different than it used to be, and I think that whoops, sorry guys, forgot to turn the phone off before I got online with you. Sorry about that. My personal point of view on bonds and interest rates, and you're talking about a bond fund, is that I think people's motivation for owning bond funds isn't clearly established yet. I'm sorry, the purpose for liquidating bond funds is not clearly established yet.
I agree with that. I do agree.
I think the owning the bonds and the bond funds has proved to be so successful. There's a lot of people out there that just are not going to let go of that easily. So this time around, liquidating interest rate or fixed income derivatives, liquidating all that is probably going to take longer than it used to last time. So there's going to be a lot of capital that is held up in bond funds that isn't normally moving as quickly as other times. And the problem with that thinking, and I'm trying to get where to go with that, is that the problem with that thinking is that it's too long term for most of us to make money every week. There might be an exodus out of bonds and bond funds at some point, but it could take 3 or 4 or 5 months to work through the system instead of like it normally does in just a handful of weeks.
Right.
So I don't know if I can really offer any point of view there other than to say that there's a lot of money tied up in bond funds right now, and those guys are very happy, and they've had returns of huge amounts for years. Why would they leave? It's going to take a lot longer for those people to move that money. So there's going to be a lot of capital, in my opinion, a lot of capital that's going to be tied up for longer than we normally would expect it to be. So I would think bonds, and they're not going to have that big crash like they normally have. I don't think.
Okay. I hope so. I hope you're correct on that.
It would be destabilizing too. That's another thing.
Yes, it would be. And
Yeah.
I think that's actually what's going to happen, but another conversation. So I would love to have it with you, Jason, but right now we're going to move on. I'm going to let Mike talk about TLT, and then we're probably going to have to start wrapping it up.
I am actually against what you're saying, Jason. I actually do think bonds are going to have a big sell-off, and it's not that far off. This is a 10-year chart, monthly chart of the TLT. You can see this trend line, which I've been watching now for a long period of time, and that's why I'm in TBT, because we broke it. We broke it big time. We have not been able to recapture it. And when you go up and you look at this on the weekly, you can see on the weekly, we tried one pathetic bounce to get back up and we couldn't do it. And then you go over to a daily chart on a 1 year and you can see here, we are just trading down on the 8-day. We have no real bounce attempts here. I do believe that we're getting to that point. When you get to a critical point, they're going to start dumping this, because as you said, there's a lot of people that have their money tied up in bonds, and they didn't go there for yield. They went there because they thought it was safe, and they're watching their investment go up, who are suddenly going to say, get me out. I want to protect that money I've made. And the yields are going to go through the roof, and we have potential inflation problems starting to show up. We saw that in the last CPI. I do think that we're going to hit a critical mode, and we cannot even get close to that trend line. For 3 days, they tried, and now they've lost it. And you got a big jobs number on Friday. If that jobs number is hot, look out. The market can get rattled. The bond market could get absolutely rattled. And you're right, this could very well spook the market. But I do think that bonds are in for a big sell-off at some point this year, and I don't think it's going to be slow. I'm a little worried it's going to be very, very much like the ETNs that track the VIX, those volatility, those leveraged ones. Because remember, these are leveraged as well. You know, the TLT is leveraged and TBT are leveraged, so you got to be careful with these. These things could get wild in the after hours.
Yeah, agreed. Very well said, by the way. And both Jason and Mike, I respect what you're saying, and I believe that they're kind of coming from a little bit different areas. I think with Jason, you're basically talking about the size of the money that's sitting in the physical bonds, not in the TLT, but in the physical bonds.
Yeah, you have to consider that. Yeah,
yeah, I agree.
That. Yeah,
I agree with you, and how fast that money can or cannot move. Now, bringing it back over to what Mike has added to the conversation, I do see them going down, and I see it could happen very quickly, as we have seen. If we can just go back to November of last year, they just kind of went bam, and they knocked them out. But I don't know if that necessarily means that there was liquidation of the bond itself.
Yeah, well, that's a great question.
Good point.
Great question. Yeah.
So
by the way, breaking news: Gary Cohen has resigned.
Yeah, because I don't want to leave listeners with the misconception of we've got somebody saying that no, you got to stay long bonds versus someone saying no, you got to dump bonds.
Right.
That's not what's being said here. What we're really talking about is if you're holding physical money that is tied up in a 30-year note or 30-year bond in a 10-year note or a 5-year note, there are certain procedures that have to be followed in terms of bail me out of this, rather than just us calling our broker saying, please sell my shares in TLT or whatever. So
right.
We could see the bond market literally collapse. The people that I don't know if I feel sorry for them or not, but the people that are not able to get out are the ones that are going to be sitting there hanging on because they can't get out, and they're going to lose a lot more than what they think they may be losing. Anyway, we're gonna end it there because we're already a little bit over, and I thought in my mind I was going to try to come in on time for David. Once again, I'm just going to go back around and just again tell us how we can get a hold of you. If there's anything on offer that you want to share with listeners as a kind of a special. And again, I'm going to start with Jason.
Well, thanks again. Well, guys, thanks for having me. You know, like I mentioned before, when I came online with you, this is the first time I've done this new timing research format that I hope I'll get a chance to get invited back to. It's great concept. I loved it. I hope the listeners learned a lot too. If you're interested in spending more time with me as a trading coach or someone you want to bounce ideas off of, that's basically what I do all day long. All you have to do is email David. He'll give you my contact information. You can always get to me at theliononline.com. Also, if you're really interested in learning more about the cryptos, I can give you something really interesting as a way for you to get free Satori, which is the industry name for fractional Bitcoin. I'll give you a link where you can actually participate to earn Satori just by participating, just by getting involved and answering some questions and playing some games and all that good kind of stuff that makes it really easy to get involved, to learn. Basically, it's a place to go to get educated, start the process, and you might make $1 or $2 this year at the most, maybe $1.50. The point is, it's really interesting, it's fun, and there's a way for you to learn more about the cryptos if you're interested.
Thank you. Mike.
First off, David, Michael, thanks for having me on. Jason, it was nice to meet you and to debate with you, and I think that's the whole spirit of the show, is to have
absolutely. Oh, I think you and I have had a chance to do it before on the other show that.
That's right.
Yeah, maybe once or twice, because you were the Alpha Shark. So I never had a chance to meet with you guys yet. I'm hoping I get the chance to do that.
So again, nice meeting you. Nice doing this. By the way, markets are getting sold hard right now on this Gary Cohen news. I have this up for you on the screen. You can see the SPYs are right to 270 already. So we just gave today's move and then some all the way back real fast. We'll see how that plays out.
What happened?
Gary Cohen resigned.
No kidding. Oh, it just keeps getting better for the Trump administration.
I mean, he cannot keep. I've never seen a cabinet turn over as fast as we have in this administration. I'm going to leave my political views aside.
Yeah, I mean, God, it's amazing, isn't it? How it affects the market so quickly.
I think we just found our impetus for the market to go down tomorrow.
We certainly might have. We'll see how it does. We got a long way to the open, though. I always say that.
True. You're right. So go ahead,
a long way.
Right.
I want to see how the pounds respond too. That's a big thing for me. How does that happen?
All right. Well, we're gonna have to wait.
If you're looking to get a hold of me, Follow me at Options Mike on Twitter. I'm very interactive on there. I post free stuff on there all the times and videos and things that catch my notice throughout the day and news. If you want to join me in my service, come to smartoptiontrading.com. Click on there. I have an offer, $25 for the first 30 days. You can't beat that. That's the cheapest 30-day trial you're ever going to get in your life to get all the information I give you. And then if you want to walk away, you walk away. But I guarantee you'll make a lot more than the $25 you're going to give me for that month. Every morning I do a video talking about what I like in the market and how the market's set up, option flow and news, trades, charts throughout the day, and then a wrap-up video every night telling you what I like, what I think is swingable, or just what I'm thinking here. And tonight I said, I'm not taking any new positions home long. I'm going home flat, and we'll take tomorrow as it comes. So if you'd like, join me. I'd love to have you. Thanks again, guys.
And once again, I'm Michael Filighera. I'm with logicalsignals.com. That's my own website. Still being vamped, so you can contact me by sending an email to michael@logicalsignals.com, and I'll be sure to get it, and I will respond, no problem. One thing that I quickly want to toss in is that I have an ex-member of my own trade room, and that she's gone off and she, with some help from me and just a lot of hard work on her own, has come up with a trade room. She's an exquisite trader. She uses Fibonacci. She uses a lot of different vehicles, but we're talking day trading, and she's had tremendous success. And right now, I'm going to put into the chat box, let me see if I can do that, just the website. And if you go to the website and you type that in, go to the website, you will get, I think it's going to be a total of at least $100 off of your first month in the trade room. And trust me, the amount that you're going to pay for that trade room, you will earn with Natalie on day one. And with that, I'm going to thank David for asking me to moderate today. It was fun. Thank you, Jason. Thank you, Mike. And I'm going to turn it back over to David.
All right, thanks, guys. A lot of good information today. Great show. For everyone watching, just want to remind you, you can hit the YouTube subscribe button to get updates on future shows. Also, be sure to join us next week for the Crowd Forecast News Show. That'll be Monday, March 12th at 1 p.m. Eastern Time, and then the next episode of this show, Analyze Your Trade, on March 13th, Tuesday, again at the new time of 4:30 p.m. Eastern Time. And just want to thank my guests again for this week. Jason Jankovsky of theliononline.com. Thanks for being here on this this newer show for the first time.
Yeah, thank you so much. I really enjoyed it. I didn't know some of the stocks you were going to ask for details on, so I'm going to have to bone up for next time.
Yeah, we get some good kind of unusual ones every week, and good mix. So thanks for being here. And Mike Pisani of alphashark.com and Mike Filighera of logicalsignals.com. Thanks, everyone.
Thank you.
Thank you.
Thanks, guys.
Good night.
Good night.
Bye.